Gold and silver are the only monies, as you mentioned, have no counterparty risk. And really what that means is they can't be inflated, they can't be printed, and they cannot go bankrupt. You cannot wake up tomorrow morning and find out, oh, the company created some product that kills people and now the stock's worth zero. Gold and silver have been money for 5,000 years. They cannot bankrupt. If you get it out of the system, you're out of the system. People are thinking, oh my gosh, gold's $2,500 an ounce. It's too high. I'm not going to buy it. Well, the only question in my mind is how many zeros get put on the end of that 2,500 before this is all done.
Inflation is a growing concern, and more people are worried about how the upcoming presidential election will affect the economy. With those issues at hand, it's no surprise that there is an increased interest in gold and silver. Former stockbroker and GATA contributor Bill Holter dive into the practicality of storing gold versus silver, highlighting their unique financial advantages. Holter emphasizes that gold and silver offer unparalleled financial safety and autonomy compared to other forms of money. He notes that these precious metals are the only forms of money with no counterparty risk, meaning they cannot be inflated, printed, or devalued by a company's failure. With gold recently soaring to a record high above $2,500 an ounce, industry executives might believe that this is not the ideal time for investment. However, considering the current momentum and a range of bullish factors driving bullion, it's unlikely that this will be a significant deterrent. Meanwhile, silver, priced at around $30 per ounce, remains significantly below its previous peak of nearly $50. Many analysts consider silver to be undervalued, particularly when factoring in the potential for rapidly growing industrial demand to surpass supply. Despite this, the increasing value of gold, now worth about $1 million per 400-ounce bar compared to $100,000 2 decades ago, makes it a manageable asset to safeguard. Bill Holter adds that while some may view gold's current price of $2,500 per ounce as high, he believes gold is significantly undervalued. Holter questions how many zeros will be added to gold's price as the economic situation evolves. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
Jim Sinclair originally coined the phrase, get out of the system. He ran a clearing firm, understood how it works, and back in, I think, 2004, 2005, started telling people, get out of the system. Keep low bank balances, get your stock certificates in hand, pretty much stay away from insurance products, and put your hard-earned savings in gold and silver, not at a bank, not within the banking system. Either hold it yourself or do it through a private non-bank vault, because gold and silver are the only monies, as you mentioned, have no counterparty risk. And really what that means is they can't be inflated, they can't be printed, and they cannot go bankrupt. You cannot wake up tomorrow morning and find out, oh, the company created some product that kills people and now the stock's worth zero. Gold and silver have been money for 5,000 years. They cannot bankrupt. If you get it out of the system, you're out of the system. And we're absolutely headed for central bank digital currencies all over the world. And just for the two of us doing this conversation, we would have our accounts shut off by this afternoon.
Yeah.
So just understand that owning gold and silver creates liberty for you. It creates options, creates choices. It's wealth that cannot be denied to you. Here in the United States, back in, 1933, 1934, when they had the bank closures, people went to their safe deposit boxes and they were emptied. I mean, if you had gold in your safe deposit box, it was gone. If you put gold in a safety deposit box now, you got to be out of your mind because it's going to be taken. Well, it's fairly easy to store a large amount of dollars or euros or whatever in gold. I mean, a 400-ounce bar now is $1 million.
Million.
I mean, go back 20 years ago, and you were looking at $100,000. So now it's $1 million. And I mean, to store 2,000, 5,000 ounces, on your property, I mean, that's certainly doable. Now, silver's a different story, but yeah, you can hide gold. You can dig holes on your property. You know, put gold in your basement, put it in a potted plant, whatever. There, you can hide that because now you're talking about a large uh, currency amount per ounce. And while we're talking about this, and I noticed that James Turk was just talking about his gold overvalued. Gold is so undervalued, it's not even funny.
Mm.
People are thinking, oh my gosh, gold's $2,500 an ounce. It's too high. I'm not going to buy it. Well, the only question in my mind is how many zeros get put on the end of that 2,500 before this is all done.
Central banks around the world have been aggressively acquiring precious metals, particularly gold and silver. In 2022 and 2023 alone, they purchased more gold than in the previous 4 years combined. This trend shows no signs of slowing down. By March 31st, 2024, central banks had added a record amount of gold to their reserves. Notably, the People's Bank of China reported holding 2,262 tons of gold, while the Reserve Bank of India increased its reserves by 19 tons in the first quarter of 2024. The Czech National Bank also reported expanding its gold holdings in 2024. The National Bank of Poland is in on the buying too. More striking than the scale of these purchases is the rarity of central banks divesting from gold and silver. Only 3 central banks worldwide were net sellers of precious metals in the first quarter of this year. Looking at this growing demand, Holter criticizes efforts to predict gold's exact future value, arguing that anyone offering a precise figure is simply guessing. He proposes that if gold were revalued to significantly higher levels, such as $10,000, $25,000, or even $50,000 per ounce, its increased value could substantially counterbalance the losses caused by the dollar's decline, effectively filling the black hole created by the diminishing dollar value. Let's now turn our attention to the video again.
I would just say if central banks all over the world have been actively hoarding gold, there's a reason for that. And all you have to do is look at what their holdings are. And the average central bank worldwide holds maybe just shy of 60% of the reserves in dollars. And they know that that's going to implode. But if you revalued gold, I mean, pick a number to 10,000, 25,000, 50,000, who knows what the number is. But if you revalue gold much, much higher as the dollar implodes, then what happens to their balance sheet? The gold, the gold will blow up enough to fill the black hole created by the the dollar value evaporating. So really, what they're doing is they're front running what they know is going to happen. Yeah, if anybody gives you a firm number as to where gold's going, they're full of crap. I mean, they're making it up.
Yeah.
You mentioned sanctions and you also mentioned derivatives. First off, let's go back to October last year. The United States said we are going to confiscate 300 billion of Russia's treasuries. That was the low in gold. That was roughly $1,700 an ounce. Now we're just north of 2,500. That is almost a 50% move in the value of gold in less than a year. That's completely unheard of. And that's simply because nations worldwide have said or have thought to themselves and acted by buying gold because they're thinking, well, if they could do this to Russia, the most powerful military on the planet, they could do that to us without a problem, without even batting an eye. So that's the reason gold has rallied so strongly from October. You also mentioned derivatives. And I guess with this part, I'm going to ask you a question because I don't really know the answer. 2-3 weeks ago, you saw the Japanese market based on a 0.15% raise in interest rates, the first raise in 20 years or whatever. That market imploded 25% in 3 days. And I looked at that and I said, well, this has got to be it because there's got to be margin calls all over the world in all kinds of markets. And I mean, even if you say that the yen carry trade is 20 trillion, which is what the official number is, that's on books. That doesn't include OTC derivatives, which could be 10 times that.
Mm.
And almost immediately, probably 3 or 4 days after that happened, people are running around saying, oh, well, the carry trade, they've cleaned up 75% of it. That has to be complete. It took over 20, almost 30 years to put that carry trade in place. And you're telling me that in a 3-day period of time, 75% of it was erased and no one died? There was not one death, not one financial death. Something really stinks. I mean, we found out in 2010 that the Federal Reserve had lent 17 trillion all over the world to save the system. We didn't know it at the time, but we found out after the fact. How much money do you think central banks all over the world put up to keep this thing from imploding and shove it under the rug? I mean, I'm asking you your thoughts on this because I don't see how it's even possible that what happened did not kill multiple companies and create a domino effect.
Gold is classified as a Tier 1 asset by the Bank for International Settlements, marking it as a globally recognized high-quality capital reserve asset. Central bankers worldwide share this view. Despite not making their fiat currencies redeemable in gold, central banks have been rapidly accumulating gold in recent years. Both gold and silver are currently at a crucial crossroads. Gold is trading around $2,500 while silver is priced near $29.30. Both metals are experiencing pressure from a strengthening US dollar and uncertainty regarding the Federal Reserve's policy direction. Do you think the recent price trends for gold and silver signal a long-term shift in the precious metals market? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.